For 50 years, oil gave the US dollar its power. Every barrel sold meant more dollar demand, more US influence, and a single financial center of gravity. But today, something quiet is happening. Gold is rising, oil dependence is shifting, and China is right in the middle of it. This isn't about loud announcements or overnight revolutions. It's about how a quiet, methodical shift in two key markets, oil and gold, could slowly reshape the world's reserve system. Oil has been the backbone of the dollar's dominance for half a century. After the US left the gold standard in the 1970s, a new structure emerged. Oil was priced in dollars. Importers needed dollars to buy energy. Oil exporters held those dollars and recycled them into US assets like treasuries. This petrodollar loop locked in global demand for the dollar and made US financial markets the anchor for global reserves. For decades, China was at the center of that system. As the world's largest oil importer, every shipload of crude meant more dollar exposure. But Beijing also saw the vulnerability in that model. Most of its oil passed through narrow shipping lanes, and the more it imported, the more it was tied to the dollar system. So China started to change its energy model. It poured investment into renewables, electrified its transportation system, diversified supply routes, and built massive stockpiles. The result? Its oil import curve flattened, while the economy kept growing. Less oil meant less forced dollar demand. That was the first quiet shift. The second one revolves around gold. Gold has no counterparty risk, it's accepted everywhere. And for centuries, it's been a stabilizer for national reserves. Over the last decade, China has steadily increased its gold holdings, officially ranking among the world's largest sovereign holders. This accumulation happened as gold prices quadrupled and recently crossed 4,000 an ounce for the first time. But this isn't just about buying gold bars. It's about building infrastructure. The Shanghai Gold Exchange has opened its first offshore vault in Hong Kong. It's inviting foreign central banks and institutions to store and trade gold through its platform. This mirrors what London built more than a century ago. London didn't become the gold capital through politics. It did it through infrastructure, refining standards, custody networks, and deep liquidity. Today, London holds over 8,800 tons of gold for governments and institutions. China is creating a second hub in Asia. For half a century, oil was the gravity well that pulled everything into the dollar system. But if countries can power their economies without importing as much oil and hold more of their reserves in something neutral like gold, then the center of gravity itself starts to move. This doesn't mean the dollar disappears, but it means the system becomes more flexible. Instead of one dominant core, reserve flows can be spread across multiple nodes. Energy on one side, gold on the other. Oil gave the dollar its backbone. Gold offers countries a way to diversify their reserves. One is about how nations spend. The other is about how they save. Even small shifts can have outsized effects. If just a fraction of global reserves moves from treasuries to gold, the impact on liquidity, pricing, and settlement hubs could be significant. That's why China isn't just accumulating gold. It's preparing to host a larger share of the global market. For decades, the world has relied on a single core. Oil priced in dollars, reserves held in dollars, and payments cleared through US-centric systems. Now, that structure is quietly evolving. Less oil dependency on one side, more gold diversification on the other. No big announcements, no headlines screaming change, just a deliberate realignment, step by step. This isn't about replacing the dollar overnight. It's about building options, slowly, quietly, and strategically. And in global finance, that's how the biggest shifts always begin. This is Second Level Signals, Global Notes by JP. If you found this breakdown useful, hit like, subscribe, and ring the bell so you don't miss the next signal.